What's up everyone, Brian Phobos here. Today we're going to talk about this cryptocurrency crash. Just to give you guys a little bit of insight on the whole situation. I've been involved in cryptocurrency since 2013. This isn't my first rodeo. I've done a lot of stock and option investing. I have a computer information systems degree. That's if you guys are new to this channel. This is going to be a very controversial video. Some people aren't going to like what I have to say, especially the teeny boppers who have been in crypto for 3.5 weeks. It'll be kind of like my SALT video or my Tron video where people don't like what I have to say. But if we go back 2 months here, I was using this thumbnail that I made where I basically was showing the parabolic move and then saying pop. And then it says, how will this Bitcoin surge in? Question mark, or will it? And in this particular video 2 months ago, I was saying, no, it's going to keep going because I'm seeing more and more and more people talking about this. I saw the rumble getting louder. And I realized that a lot of people that were buying into crypto at that time did not know what they were buying into, and they weren't ever trying to move the coins. So they didn't realize that Bitcoin didn't even work and that there was all these ridiculous fees and the network was bogged down. But let's look back at some history. Now, if we look at the current bubble that just burst, there's one word for this, and it's fugly. So, you know, and a lot of people are trying to, you have to understand, a lot of YouTubers, you're going to be better off just talking positive about everything and acting like everything's good, everything's good. That's how you get the most subs. That's how you get the most upvotes, the most thumbs up. That's how you do it. I don't have as many subscribers, but if you want to see both sides of the story, and my ultimate goal with this is to show you guys and make you guys maybe see something that you weren't aware of previously, and gain that and kind of decide what you guys want to do. And I'm going to show you guys what I'm doing to hedge my risk. But let's take a look at some of these previous bubbles. Let's go back to early 2013. This is when Cyprus stole money from their citizens. Now it went up and then crash, pop. So it came down, and then we had the dead cat bounce or the bull trap. And then we came over here and we had a lower low than we saw here. That's very typical. You're going to have something that seems like a fake low, bull trap. People are like, oh yeah, it's good, it's recovering. And then it's like, nope, psych. So it goes back down. Zoom out. Now, that particular instance is a little bit less relevant than this instant that happened in late 2013. And this is when I got in before this, started mining, first found out about Bitcoin, was super excited about it. And then this thing went on a complete parabolic vertical ascent. It was crazy. Mt. Gox crashed, or basically got hacked, or there was an inside theft or whatever the hell happened. They're still trying to figure that out 4 years later. But you know, it came down. You could say it's kind of weird because we sort of had two dead cat bounces in a way, but say this is the dead cat bounce or the bull trap, and then we headed for a lower low, and it was a very painful, long, drawn out process. This says 177. I usually say 176 when I talk about it. And then we had the nuclear winter of 2015, the crypto nuclear winter. It was terrible. And here's the thing, if you're listening to YouTubers that did not go through this, weren't invested back here in this bubble, it's kind of really hard for them to gauge any kind of emotion from what happened here. Even if they look at it on the chart, they didn't feel this. And I'm going to tell you, it was painful. It washed a lot of people out, and it actually screwed them up for this one because Bitcoin actually worked better in 2013 than it does now. So, and then they should have scaled back in 2015, but they wouldn't. They kept arguing, just all kinds of bullshit. The same stuff that's going on now. Here's the thing, if you're newer and you keep hearing this, you know, this stuff about scaling debate, all this and that, it's like a broken record. We were hearing this stuff back here this whole time. And, you know, all this FUD about this country maybe banning it or this country banning it, it's like a broken record. That same garbage was happening back here. Just kind of block that stuff out. The only thing that really matters is don't use Tether. You know, stay away from that. keep your coins off the exchange as much as possible. And, you know, you hold your keys, you own your coins. You know, that's really what it comes down to this whole time. So any of this other stuff about countries banning it, nobody can stop Bitcoin. No country can stop Bitcoin. No person can stop Bitcoin or cryptocurrencies in general. I want to talk about it as maybe a general sense. But anyway, as we see here, typically when something goes up super fast, you'll have it come down just as fast or faster. Now in this situation, it didn't quite come down as fast as it went up, which was kind of a little bit odd or a little bit different. But ultimately, you fall asleep and then it dropped 30%. So from 20,000 into where it dropped, it was essentially a 60% decline. And if you go back to 2013, 2014, we had an 85% decline from the peak to this, and it took 400 days, actually a little more than 400 days. It's terrible. It took forever. And then we had the nuclear winter, and people were on suicide watch. It's terrible. So let's look at other bubbles. Bitcoin is the biggest bubble of all time by far as percentage gain from the bottom to the top. And these other bubbles are old. Tulip Mania and Mississippi bubble, South Sea bubble. This stuff's old school. Tech bubble is the newest one, but it's barely a blip down here. Now, if you think about it, it kind of makes sense because retail investors really couldn't get involved in the tech bubble before the stuff was public. You know, the venture capitalists were able to do that. They were accredited investors. With crypto, one of the benefits is we were able to get in on the ground floor as retail investors and, you know, appreciate these gains if we get out at the right times, all this kind of stuff. Now, that being said, kind of what's in store for it. And let's look at a couple other things to see if we can gain any kind of reference from, let's say, the S&P 500. This is 1990 to present. And you had the dot-com bubble, that burst. Then you had the housing bubble, that burst. This low was actually lower than this one, which was weird and very odd. And then now we've got this huge vertical ascent, or pretty vertical, not like crypto, but pretty strong move and all that stuff. So when this ends, not really sure. But the thing is, if we see even like a different chart, if you were a hodler from 1952 until now, you would have been great. If you're a hodler from 2001 to 2013, you didn't earn anything. You actually lost money because of inflation. So that's kind of the weird thing about this stuff. Timing is everything in these markets, especially with crypto. You get in at the wrong point, you're way, way upside down. If you don't have more fiat to commit to it, to basically build an upside down pyramid, you keep buying more and more. Let's say you bought a Bitcoin up here. Then it goes down, you buy 2 Bitcoins. Let's say it goes lower, then you buy 4 Bitcoin. Goes lower, buy 8 more Bitcoin. But that's a lot of money. You know, it's like you get your average down, but if you committed too much up here, then you're wrecked. So see what we can do though. Because some of you guys might be upside down. I feel for you. I mean, it's a nasty market. It can be tough out there. So maybe we can't compare it to the S&P 500. Let's just pretend, because those are companies, they have earnings, blah, 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 blah. Let's do precious metals. Cryptocurrencies mirror precious metals more. So we had a peak here in gold in 2011, and then it has kind of been on this downward decline since then. But essentially, you get these things going down, and then you could say, some of this stuff is bull traps, or you could say this is this going down here is kind of a bull trap, and then maybe it goes lower. But it's really hard to say and really compare it to this, because this is traded, on the markets. This is silver, actually. You have gold, very similar situation, peak in 2011. And, it goes down. But the thing is, let's say there's a limited supply of gold, but we don't really know how much gold is out there. We don't know how much silver is really out there. New mining techniques could rework some of the same dirt that they worked before. That situation actually happens over time. So it's really hard to say with that. Now, with most cryptocurrencies, we know what the max supply is. On something like Ethereum, there's no max supply. We don't know how many there are going to be. A lot of people don't know that. And it's like a lot of people don't talk about that. But let's say with Litecoin, there's going to be 84 million. With Bitcoin, there's going to be 21 million. So we know that there's going to be a finite supply out in the future. Another thing that I want to point out is during this bubble, 2013, 2014, the inflation of Bitcoin was around 10%. Now we're at around 4% inflation. So that could maybe lead a person to believe, well, the drop isn't going to be as severe because you don't have as many miners that are maybe going to have to offload coins to pay for equipment, to pay for electricity. There's not as many coins out there potentially, but each coin's worth a lot more. And it is still profitable to mine at these levels. Now, over here, it actually got to a point at its worst to where it was pretty much unprofitable for most mines to mine, especially GPU miners that were more home-based GPU farms. That got unprofitable. You almost had to have, you have to have 4 cents kilowatt hour power or lower to really make a sustainable mine that you can play the long-term game, basically, to basically hedge your risk against these large drops. Now, let's go into a few other things here. So we're past gold prices. One thing I noticed with this large drop, it caused a crazy cooling effect on the whole market. People weren't moving their Bitcoin and their Ethereum near as much because these two, if you've seen my past videos, I was always talking about how these networks were pegged. Now Ethereum is pegged again with all these unconfirmed transactions, but Bitcoin has went way back. Now some people might say, oh, that's because of SegWit or Lightning Network or that kind of stuff. I can tell you that's not enough volume. This thing was like, the mempool was like filled up with 100,000 transactions, at any given time. I mean, it was terrible. Fees were outrageous, all that kind of stuff. But, like a week ago, Ethereum pulled way back, like the needle was way back, and Bitcoin was too. And that told me people aren't moving their coins. People are scared. They're scared to buy more and then send them over to Binance and buy altcoins. People just kind of were like, whoa, they just kind of froze up. So this is the Lightning Network. These are testnet nodes, but here's the one thing I want to say about Lightning Network. Newer people to crypto, and I understand where they're coming from when they think this. They think that this stuff's going to happen like in the next couple months or something. But just keep in mind that the Lightning Network was actually a concept that came up with early 2014. I found out about Lightning Network in early 2016. We're in early 2018. We still don't have the Lightning Network, in a usable fashion that's safe to use, kind of thing. So it could be another year, 2 years, who knows? I mean, don't hold your breath or you'll die, if you're waiting for that. And let's say with SegWit got implemented in August, and Coinbase still hasn't added it. They're supposed to be adding it this month, but that just shows you this stuff it happened slow. The stuff was at capacity. People were just, stuff was getting overloaded, and then now it's like suddenly it's bubble. Like we got this crash, and that's one thing I want to say. A lot of people are going to be mad because I'm saying this is a crash, but you don't have. This isn't just a correction. Corrections don't happen. Corrections aren't 60% of the value from the peak. So going forward with the whole thing, a couple months ago, I talked about NuBits, and I talked about having a harsh pullback. And basically, I was talking about Tether, NuBits, STEEM Backed Dollar, and BitUSD, how you could lock in gains. One of the things I'm doing to hedge my risk, even 2 months ago, I synced the NuBits wallet so that I could take some off the top. I kind of even myself got greedy, even though I knew this scenario. Obviously, you see me doing the pop thing here, that this scenario could happen. But even it caught me off guard, like it happened so fast that I started moving into NuBits up here. But it was like almost like in a way like too late for the majority of this decline. But I got greedy up in this time frame, you know, playing out, you know, surfing around in the shitcoin waves, as Rules for Rebels said in one of his videos. Pretty freaking hilarious. But I think a lot of us got caught up in that. The stuff was surging, and the teeny boppers were, you know, pitching it, and then a bunch of teeny boppers would come in and buy up a bunch of these, you know, cheap altcoins. And so, you know, I think we all got kind of caught up in that a little bit, maybe more than we even wanted to. Because even some of the stuff, I mean, I kind of went against my better judgment on some ERC20 tokens that I would have never typically bought. But I could just see kind of like a lot of people pitching it. You know, popular YouTubers were pitching stuff, and I'd seen I'd seen it before where they had done that, and then the stuff would surge, kind of thing. So, and I kind of jumped on a few of those little trains, and you know, got a little bit too involved in that when I should have been taking some icing off the cake into NuBits earlier. But that being said, I didn't catch that peak, but I was still way up on a lot of my stuff. And so then I started moving into NuBits. But it's only 9% of my holdings at this point. I've done the calculations. And NuBits itself comes with some risk. If it decouples from the peg, then you're in trouble. But for now, it's been holding to $1. And if you don't know what NuBits is, it is $1 pegged crypto. So the thought is, let's say we do go lower, then I'll be, you know, at a certain point, and then it'll drop lower, and then I'll buy back my coins, or, you know, buy back more of my coins and end up with a greater holding, or I've stacked more coins at that point than I had previously. So just 9 days ago, I was talking about NuBits a little bit more, and basically, you know, what I was doing as far as that. Now, are we going to see a retracement over a long period of time like we had back here? One of the biggest difference here is we didn't have all this capital that came in through these ICOs. You got to understand, a lot of these companies now have tens of millions of dollars that if they manage their money properly, then they have enough money to pay developers, do marketing, and do all that and operate as a company for a long time. Like Electroneum raised $40 million. Let's look at Steam Incorporated, you know, Steam It Incorporated. Basically, they're, you know, this one account, which they have multiple accounts. They have like Steam It 2 and all these others. This is worth $214 million. You know, so they definitely have enough money, or definitely enough resources to continue development and be in for the long haul, even if this thing, you know, crashed down, we went to 1,000 or something like that. Now, typically, you know, what's my assessment on the market and why am I going into NuBits? Personally, I think that we're going to go lower. I think we're going to go below 5,000. If you know, from here to here was an 85% retracement. Let's say 85%, maybe that's too severe. Let's say we're not going to do as bad as that. Let's say it went down 75%. That puts us at $5,000 for Bitcoin. And, you know, this was way more extreme. This uptrend was way more extreme than a lot of us anticipated. So we might even see lower than that. So when I say 5,000, I'm looking for that number to really kind of start putting more of those NuBits to work and averaging down and rebuying some of the coins that I sold. And also on top of that, knowing that it could go to 4,000, could go down to 3,000, could go down to 2,000. I don't think we're going to have this long drawn out period though, again, like I said, because there's a lot of institutional eyes. There's a lot more institutional eyes on Bitcoin and cryptocurrencies now than there were back here. But the thing I will say about back here is this stuff was in the news. There was big partnerships being signed with big companies like PayPal, Microsoft, Dell, Overstock, all that kind of stuff. So a lot of you guys that are newer, you're thinking, oh man, like, you know, this thing's taking over and all that. And what I was saying previous to it going to 10,000, I was saying, we're going to have one big boom and another bust, another huge bust. And then the next time it goes up, it takes over the world. And I kind of even started wondering, I started thinking, you know what, I think we're on a global takeover path right now, just straight away, because if you look at the S&P 500, that's $24 trillion, and that's just 500 companies. That's the S&P 500. So this is less than $500 billion worth of money in this market. And then so obviously, if more money pours in over time, then it will continue to rise. But the biggest thing that we can take away from this, every peak, and as we've had the booms and busts, the more times it happens, it's like Jordan winning championships. He kept winning, and about the time he's in the finals, you're thinking, yeah, I'm not going to bet against this guy. He keeps winning. He won 6 championships. So Bitcoin's been winning these championships, keeps going up, peaking, pulls back, peaks again, pulls back, peaks again. So I don't anticipate that trend to necessarily change. We are going to see new highs. This isn't an extinction event, nothing like that. Crypto is here to stay. No country can stop crypto. No person can stop crypto. We're going to see some amazing thing happen, but don't think it's going to happen tomorrow. And one of my biggest worries is that we do have a longer drawn out period in the nuclear winter scenario, but I don't think it's going to be as long as this. And the other thing that worries me is in the United States, everything is debt based. I mean, people are making payments on their cars, their houses, their cell phones, their dogs, everything, their food, probably making payments on their food. I mean, they kind of are. If they're buying with credit cards and they still haven't paid off that balance, you can say, yeah, they're making payments on their food. But everything's debt-based in the United States. And so I think a lot of other parts of the world are like that too. And so it's like, how much of this, even if it seems like it's not debt-based, if the rest of their life is debt-based, then ultimately we have this. And we saw some of the recent companies like Chase and Wells Fargo and all that, making these statements that say, oh yeah, we don't want people buying Bitcoin with their credit cards. Well, that does make an effect. If all the credit card companies are saying that, we don't want people buying it with the credit cards, it's too much of a risk. Then people can't maybe average down, or some of that buying can't occur that would have. So that is one thing to think about that could cause like an even harder cooling effect. But in general, I think you got a lot of hedge funds, a lot of big money that has suddenly changed their mind, or they don't want to miss this next rocket. They see it's a big enough pattern, even if they forget about this little uptick over here in 2011, and they just say, well, we've had these 2 bubbles over here, and we had this third one. There's going to be another one. Cryptocurrencies aren't going away at this point. And it could go up again. But ultimately, what I want to say in this whole thing is that I think we're going to see lower lows. And typically in all situations, even if you go off these last 2 situations, or you go off of stuff that happens, in the stock market, typically any kind of bubble that is going to have a certain level of emotion attached to it, you're going to see that. You're going to see the bull trap, and then you're going to see ultimately a lower low. Now, how quick that happens, I don't know, but that's why I'm stacking NuBits. I'm stacking NuBits, and there are days when the market goes up, and I think, you know what? Maybe I'm an idiot for stacking NuBits. I could get burned if this thing shoots back up and shoots to Alpha Centauri. But it's only 9% of my holdings. I'm 90% still in crypto, or I guess crypto that'll continue to go up. And then I've got that 9% that's pegged to the US dollar. If this falls away, it'll become a bigger percentage of my holdings. And then I'll go in harder and then basically retake a position at a lower average price. So that's what I'm doing, guys. And ultimately, I know a lot of people aren't going to like the fact that I'm saying this is a crash and that it is going lower, but that's what's up. That's what I think. But again, like I said from the beginning, crypto is unpredictable. It goes up like a rocket and down like a guillotine. So it's all determined on your risk tolerance, and if you can survive a long drawn out cool down phase. And again, I mean, I don't want to hear about you guys living in tents and eating possums off the road or something like that. You know, it's if we can all go in 100% and know that we could get by, we knew we were 100% going to be okay, yeah, we would do it. But there's always risk in all these. There's even risk in the NuBits that I'm buying. And there's a risk that if you don't buy, let's say it goes down to 5,000. Let's go back to the chart. Say it goes up here and then it goes down. We go down to 5,000. And you don't start building a position, or I'm just going to talk about myself. If I don't build a position at 5,000, as it goes down lower, I'm taking a bigger risk, because I can tell you what happened here as this went down and when it was in the 300s. Me and a friend were saying, oh man, if this thing gets down to 200 bucks, man, I'm going to go in hard. I'm going to go in hard. Then it kept falling. It's like, I don't know. Maybe it's just going to keep falling. And then it was like, oh man, if it gets down to $100, man, I'm going to go all in. I'm going to go all in. And then, you know, it got down to 176 essentially. So I wasn't in a position to be going all in right there in that time frame. Anyways, but you get the thing. If this thing falls, and let's say it went down to 5,900 or whatever, and then it popped back up, and then you might be thinking, oh man, I maybe should have bought. But then let's say it turns around, starts going down again, it goes down to 5,000. Then you might be like, I don't know, maybe it'll go lower. Let's say it goes down to 4,000, and then you're telling yourself, oh man, maybe I'll go in all in. If it goes to 3,000, I'm going to go all in. And then it goes to 3,000, you're like, I don't know, maybe it'll go lower. You know, so you're always kind of like, you're not as apt to try to like get in there because you don't know where the bottom is. But it becomes more and more risky as this thing goes lower, because I can tell you what, the base that this creates is not going to be as low as this base, because this base was not as low as this base, and this base was not as low as this base. So you can pretty much guarantee that whether it gets down to 5,000, 4,000, 3,000, 2,000, whatever it gets to, that base is not going to be as low as this base over here. So that's my assessment, guys. I think we're going to see lower lows. But stay strong, keep stacking coins, keep doing things you can do, like earning on Steem It. People are earning just from, you know, I did this contest just yesterday. I gave 2 Steem to 15 people, and I upvoted, you know, I upvoted their comment too, 100% upvote with my bot trail. So people are earning, you know, people are doing giveaways, people are earning out there, people are earning just off of comments, that kind of stuff. Trying to build a community out here. So connect to me on Steem It. You know, follow me on all social media. Steem It, YouTube, Instagram, Twitter. See you guys later.